Hi, I'm Sam Slator from Chelsea Financial Services. I've been joined today by David Harrison, manager of Rathbone Global Sustainability Fund. Hi.
Hi, Sam.
You have a dedicated division called Rathbone Greenbank Investments that screens companies for you. How does that relationship work? Do you go to them so that they can say it's okay to invest in a company, or how does it work?
Yeah, so it's a very good question, Sam. So it's very much a collaborative process. And I think it's kind of important to look at the history of Greenbank. Rathbone Greenbank Investments have been doing this for a number of years, close to 20 years on the sustainability side. And we actually adopted the same process as the Rathbone Ethical Bond Fund, which is really important because we know that that relationship works really well. It's worked well for over 10 years. And we've taken the same approach. So on a practical level, this means that we'll find stocks, we'll go away and do our kind of fundamental work. We'll have an idea about the sustainability side, but then we will go to Greenbank and say, how does this stock stack up? And I think it's really important to kind of note that Greenbank have the final say. So they'll go away and do lots of kind of in-depth work on the sustainability side. That often involves engagement, and sometimes we engage with the company together, but ultimately Greenbank will say yes or no that either we can own a stock or we can't own a stock. Okay,
so they're sort of delving a little bit deeper to see if there are any nasty surprises in there somewhere that aren't obvious when you first start talking to a company.
Absolutely, and I think in this area of sustainability, that's really important. I think there's lots more in the news, lots more companies who say they're sustainable, but we've got this fantastic resource where we'll sometimes spend up to 3 months looking at a company. And I think the other important thing is you have to go beyond the numbers. Companies will publish numbers, they'll talk about sustainability stats. We've got that fantastic ability to really engage, and often it will mean 3 or 4 meetings with management, phone calls to really understand whether it's a sustainable business or not.
What exclusions do you actually put into the investment process?
So we've actually got 2 stages, and again, we've taken what the Ethical Bond Fund did, and we've kind of put that on an equity version and taken the same ethical framework, which was originally developed by Greenbank. There's kind of 2 layers to what we're doing. The first exclusions are negative. So I won't own any companies involved in anything kind of carbon emitting, any fossil fuel extraction, anything with links to tobacco, armaments, nuclear energy. And then the second layer, which I think is probably even more critical, is a positive link. I often talk about companies walking the walk in terms of sustainability. And that's what we're looking for. We're looking for companies that are really sustainable, and companies that link their future business plans to sustainability. So I think it's important we have that very clear framework, and there's 2 distinct layers to it.
And how do you engage with companies to make positive changes?
So engagement is really important to us. If we have a company where we've got unanswered questions, we will go back to them. I think before I mentioned about meetings and conference calls, we'll often send a list of questions to the company and say, we've got concerns, we'd like more detail in this area. We'll go on and speak to them. Also, what I try to do is I will sit down with senior management of a company, often the CEO, to really work out if they're sustainable or not. I think one of the best ways to kind of spotting the fakes from the real sustainable companies is asking a senior management to say, can they explain their business? Can they explain how it's linked to the United Nations Sustainable Development Goals, and evidencing that for us? So it's very much about kind of an ongoing dialogue with a company, but also we want data behind it. So we want them to benchmark what they're doing, to explain how their future business plans are driven by sustainability.
And would you ever talk to a company that you weren't necessarily invested in yet, but sort of engage with them, still say, we're not investing with you because of X, Y, Z. If you manage to change that, then we will come back to you. And do you find that they do that, or do they just ignore you if you're not an investor?
Yeah, absolutely. I think it's we often talk about our standard being good as the minimum, and we're looking for good to better. But where a company has failed, currently, we will go back to them and say, look, these 3 or 4 issues, for example, if you improve in this area, then we can look at you. And we've seen a massive sea change in the last 12 months. Companies now coming back to us saying, yes, and we're really interested, what do you need us to do? And I think that was something really I've seen in the US more than anywhere else. US company management teams saying, we really want to become more sustainable. So we think this is very powerful, not just for us on the fund, but all investors and also the companies themselves. So we think it's something in terms of the change in process is really gathering pace.
And you mentioned earlier about the UN Sustainability Development Goals. How do you use that in your process? And could you perhaps give us an example of a company?
Yeah, so I think there's two key things we do. The first thing is that we've actually mapped back the UN goals onto our existing process. So it allows us really to measure the impact of a company and link it to a specific theme. For example, it might be around energy conservation. It might be around water or health and education. I think the second thing around the UN goals is talking about that engagement. We use them as a really good tool to ask senior management. So if a company says to us, we're sustainable, we're linked to perhaps UN goal number 5, 7 and 8, I will ask the senior management team and say, right, you say that you're linked to these goals, prove it to us. Again, this idea of walking the walk and really delving into the detail is really, really important. I think a really good example is a business called Kingspan. So Kingspan is it's an Irish listed building insulation business. But what they do, which is really interesting, is their focus on technology and research and development. So Kingspan make insulation board for commercial applications, offices, retail parks, but they'll often spend much more than the competition. So we actually went up there for the day to see their production facilities. We spent time with the senior management. And what you get then is a sense for business that is really sustainable, but you understand that they're out investing the competition. So they're driving market share, they're winning business from other people. And it's an example of a business which could be in kind of a more commodity type area, but is a very forward-thinking management team because of their key focus on sustainability.
You also invest in a company called Tomra, which has reverse vending machines. So you take an empty plastic bottle back to the vending machine, put it in, and you get some money back. It seems to have taken off in Scotland, but it's only just being introduced in England. I think Sainsbury's is trialling it.
Yeah.
Why has it taken so long?
Yeah, that's a great question. I think there's the big thing you need for something like Tomra is government legislation. So in Scotland, we've having the legislation coming through, and if you look all over Europe, Germany, for example, we've had reverse vending legislation for a number of years. I think when we get the legislation come through in England, you'll see a huge uptake in reverse vending. Because if we look at a number of examples across Europe, we've seen a huge rise in this. And we've also had a change in EU legislation around plastics. So I think as that comes through, I think Scotland will be a really good test case for England. But if you look at kind of the tailwind for something like Tomra, you've got this EU legislation. But also, I think people's mindset is shifting more towards a circular economy. People talk about the kind of David Attenborough effect. Yes. But a business like Tomra, we believe is incredibly well positioned, because I think the other thing that is important to note is the market share that Tomra has. What they do is very high barriers to entry. So we get the legislation come through, we get that change in mindset. Tomra has 75% market share with high barriers. So we believe kind of the next 5 to 10 years is really interesting for that company. And again, having the fund and the long-term time horizon we do, that makes it really exciting.
Mm-hmm. Are we expecting legislation to come through in the UK?
Yeah, it should be. It's always rumoured. We thought it might come through kind of by now this year. I think everything going on, I think that's has pushed it down the agenda. Mm-hmm. But I think it's an easy win for whichever government's, the government of the day, because it is a great story around the circular economy. It drives recycling, but also it drives a revenue stream for the government as well. So I would expect it to come through probably in the next 12 months or so.
That's brilliant. Thank you very much indeed.
Thanks very much for your time.
For more information on Rathbone Global Sustainability Fund, please refer to the latest issue of Viewpoint. Thank you.